I think up to even like 2019, Asians were not portrayed well in mainstream media. For Asian men, they're all emasculated. They're all either super nerdy or they're not considered romantically attractive and they're always never the star. And for Asian women, they're objectified or fetishized. Crazy Rich Asians was our opportunity to really change the narrative. This was a moment where we all realized like, hey, this is the first time in decades where it's an all Asian cast. This is our moment to really represent ourselves in mainstream media. We called it the Gold Open, and essentially our bet was that, hey, if Crazy Rich Asians, the movie, does well on the box office, it will prove to the rest of the industry that Asian stories are in demand.
Daniel Su is the general partner of Gold House Ventures, where he is making bets that Asian founders are the most powerful, resourceful, and hardworking entrepreneurs. They've backed companies at the edge of AI and Web3. In this episode, Daniel breaks down why identity, resilience, and connection matter just as much as capital.
I know the competition of the allocation is also very intense in Silicon Valley, right? So how do you win the allocation competition?
Capital is definitely a commodity, so you have to bring more to the table. I'm very happy to share our allocation win rate is like almost 100%, which I think very few funds could say. There hasn't been a deal we've wanted to get into that we couldn't. And most of the time we get these deals and allocations with preferred terms as well.
Hello and welcome to Build It Up, where AI meets crypto, technology meets humanity, and East meets West. I'm Bill. Before we jump into today's episode, I just want to take a second to say thank you for watching, subscribing, and being part of this growing community. But we noticed about 30% of our viewers haven't subscribed yet, and nearly 90% haven't left a like or a comment. So if you are watching this right now and enjoying the conversation, do me a favor, hit the subscribe button, drop a comment, and share it with a friend. Now, let's get into it. How are you, Daniel? Yeah, thank you for joining us today.
Yeah, thank you for having me, Bill. Excited to chat with you.
Most of the audience will be very interested. Gold House Venture come from the idea and, sort of come from the Gold House community. So can you introduce a little bit, what's the story behind the Gold House community first?
Yeah, of course. So Gold House is a nonprofit that focuses on Asian representation and empowerment, primarily in the media and entertainment space. And how it came to be was that for those who live in the US or kind of familiar what happened during the COVID times. When COVID first started, there was a lot of anti-Asian hate going around, and particularly a lot of the Asian Americans were blamed. And, the most heartbreaking parts were, our elderly in New York and LA and other cities, they would get assaulted, attacked, they would get beaten up. And there's a lot of other like racism and discrimination that happened.
Is this sort of a long-term phenomenon, or is just because, people think, COVID is from Asia?
I think this was during the Trump administration at that time. They called it the China virus and everything. And they blamed it solely on the Asian community. And, of course, they came from China and everything. But the US, like all Asians were kind of seen as like Chinese and everything. So that's kind of where it came from. And of course, previously in America's history, there were a lot of other moments where Asians were discriminated against. And of course, there's also the model minority myth and bamboo ceiling and so on. But I think COVID really just exemplified to everyone that we were not safe, we were targeted, people were getting hurt, and businesses were getting destroyed and lives were being harmed. And from that dark place, Gold House really shone through. And during COVID, this was when the Asian American community realized, hey, we need to work together. We need to bring and build community in solidarity with each other. Because previously, there were attempts to bring the Asian community together, but usually it's the Koreans would just only hang out with the Koreans, the Chinese would do their own thing, and all the Asian communities were kind of fragmented and isolated. But I think COVID showed that we really need to band together. And at this time was when Crazy Rich Asians was coming out. And this was the first
movie.
opportunity. The movie, yes.
Yeah.
It's a great plane movie, one of my favorites. And this was a moment where we all realized, hey, this is the first time in decades where it's an all-Asian story in Singapore. John Chu's the director. This is our moment to really represent ourselves in mainstream media. And I think up to even 2019, Asians were not portrayed well in mainstream media.
So even Asian, immigrate to US for more than 100 years, but still, the stereotype is there, right?
Right, exactly.
So what kind of stereotype you think, never got changed before?
Yeah, I think for Asian men, they're all emasculated. They're all either super nerdy or they're not considered like romantically attractive and they're always, never the star. And for Asian women, they're objectified or fetishized. And you see that stereotype just happen over and over again in mainstream media. People not take a chance on an Asian lead or Asian stories. And so that directly affects how people treat Asians and see, and, also how they view us, not only in mainstream media, but also in like companies and work culture and so on. And then so Crazy Rich Asians was our opportunity to really change the narrative.
How does Crazy Rich Asian, begin to change the stereotype of the Asian, from your perspective? And how do you see, this is sort of like a kickstart of the whole change?
Well, we called it the Gold Open. And essentially our bet was that, hey, if Crazy Rich Asians, the movie does well on the box office, it will prove to the rest of the industry that Asian stories are in demand, that Asian characters are popular, and more of these stories could happen. It could be financed and could be distributed. So this was really our chance to take back the narrative. And so what Goldhouse did was we brought together all of the Asian American community leaders, and we really marketed the movie, made sure tickets were sold out, and it became a box office success. And Crazy Rich Asians, the story itself, they shows Asians in a very different light. I think previously in more Western stories, Asian characters are like side characters or they're always in distress or they're not the heroes. But I think Crazy Rich Asians showed the depth and the nuance of Asian stories and Asian characters could be. And so I think that was like the trigger to really building up that community. And that's where Gold House was launched.
Gotcha. And what does Gold House stand for? And for Gold House community, what's the major operational initiative over there? What's the mandate?
Yeah, so Gold House Foundation itself works directly with movie studios, TV networks, and so on across the entire value chain, whether that's like helping with casting, scripting, marketing, or bring like product placement or even up to the award ceremony. Now we're integrated along every step of the way. And so Gold House Foundation is really like rooted and centered in Hollywood. But from there, we developed this really, really tight-knit community of just celebrities, actors, actresses, people in the industry. And from there, we grew membership to include leaders from every industry. And so I think Gold House, what it stands for is just really bridging relationships across different communities, different industries, making those connections, bringing members together, and just being like a safe place where everyone could really, I guess, previously people felt very alone. I think, recently Asians had been doing really well at the top of their industries and so on. But I feel kind of like at Hollywood in the past, a lot of the success was isolated and people felt kind of lonely or unsafe. But we built that home where everyone could just kind of be together and be safe and feel accepted and have a sense of belonging. And I think what we stand for is really empowerment to make sure everyone, especially the talent, gets the chance to really have a chance for those opportunities. That went there before, and we work directly with everyone in front of the screen and behind the screen to make sure these stories are being created and told.
And it's very interesting to see Gold House community is based in the entertainment industry to enable a lot of Asian celebrity, etc. But Gold House Venture is focusing on the technology in the Bay Area. How does Gold House Venture originated from this community, and what's the synergy between those two?
Yeah, so Gold House Ventures is relatively new. We started at the end of 2022, beginning of 2023. So as Gold House was increasing, expanding its membership and network, we wanted to extend its mission towards like the economic realms. We realized we had this really strong network, we had the capital, and we thought, hey, why don't we invest into the next generation and see how we could support Asian founders now. So Gold House Ventures initially started as an accelerator program. We had like biannual cohort. We invested money in them, helped them develop, connected them with mentors and sponsors and investors from our network and helped them launch. So the accelerator itself was a huge success. I think there's like $2 billion of follow-on funding that went to over 110 companies from our previous cohorts. And once we saw the success of the accelerator, we thought, hey, why don't we formalize this into a fund?
That's pre the fund, right? It's another, it's sort of an interim setup before the fund one.
Before the fund, yes. The accelerator program had been first. And riding off of this success, we created that fund. And that fund was backed by many members in Gold House. And that happened, yeah, around 3 years ago. And our relationship with the company is very close. I think we operate as like a traditional VC fund. We find the best companies, support Asian founders, we invest in them, and connect them with our network to make sure they succeed.
I heard from a comment from Eric from, your partner.
Hmm.
He said that, investing in the Asian founder, actually, it's a good asset class in a sense, I
Yeah.
forgot, like how much percentage of the US IPO, is associated at least, one Asian co-founder. Goldhouse, originated from invest primarily in the Asian founders. And what's the thesis, before? It's kind of like more a social impact thesis, or it's like, commercially it also does work. Like, what is your view on that?
Yeah, that's a great question. So it's definitely both. I think there is a social aspect, but however, as a fund, we need to really take into consideration the financial side too. Asian founders are definitely the best asset class, as Eric mentioned. And regarding the numbers, like when we last crunched them over the 2022 to 2024 period, 1 in 3 IPO companies had at least one Asian co-founder. And by Asian, we
1 out of 3.
yeah, 1 out of 3.
Mm.
And over, yeah, close to half of all unicorn companies had an Asian co-founder too. So even though by population, Asians are just a fragment of the total US population, we are definitely over-indexed on like the outlier outcomes for founders and startup success. So, and between you and me, and for the listeners who come from an Asian background, it's not that much of a surprise given our cultural emphasis on work ethic and we're, just really strive for like the ambition and everything. I think the psychology behind it is really fascinating, especially when I look at the immigrant founders we invest in. They're already entrepreneurs. Their parents are entrepreneurs. They made the
Yes.
journey to the US. They went through so many struggles and hardships. They know what it takes to hustle and scrap by and build resilience. And even within the US, I think the cultural upbringings we've all experienced, like the emphasis on education, hard work, not giving up, really shines through in the entrepreneurial landscape as well.
Yeah, definitely. And do you see, the Asian founders become more active in this age of the AI as compared to the previous, consumer internet and SaaS? Or it's pretty much, the similar proportion? Because I got some, perception that, now the AI,
Hmm.
basically the technology people, become more prominent as compared to the consumer internet
Oh,
innovation.
yeah.
And, I see more and more Asian face in the AI company. But I'm
Yeah.
not sure,
Hmm.
from your statistical perspective, is that the case, or pretty much, the Asian founders are always active, regardless it's in internet age and AI age?
I think it's just always been active. I think what's different now is that the barrier to entry is a lot lower. So the risk of starting something new is also a lot lower. So I don't think this applies just to Asians, but just across every spectrum. I would say what I'm seeing more of are more academics starting companies, AI researchers that are in PhD programs or graduate or dropped out. I'm seeing a lot more highly educated founders jumping into a pool. And I'm also seeing on the other end a lot of really, really young founders too, dropping out of college and so on. So I think because the barrier to entry is a lot lower now, everyone is leaping in. So I do see a lot more Asian founders, but I don't know if that's just like proportionally any different from the rest of the population, but I do see that increase. And on the technical side, there's definitely a lot more coders, a lot more technical talent too.
Yeah. From Fund One, primarily you invest in the AI, right? And in past few years, what do you see the AI evolvement? I think, in the very beginning when GPT movement got out, and a lot of people get into the app store of GPT.
Yeah,
GPT
yeah.
store. Most of the application is not commercially viable. It's just a free app. But now,
Yeah.
we talk about a lot more about the application layer. So that's, something
Mm-hmm.
happening in the application layer. And we have, a lot of AI in different vertical.
Yeah.
Simultaneously, we see a lot of, heavy capex. Arguably, some people may argue it's, sort of reinvent the wheel into the LLM model. So do
Mm-hmm.
you see, I think my question can break down to two parts. One is, how do you see the innovation of the AI application layer? And how do you see, the bubble argument of the AI,
Mm-hmm.
LLM and data center
Yeah,
perspective?
I think everyone's just kind of talking about that. I'll start with the second question first about the
Yes.
bubble and the capex and everything. My overall thoughts are I think we're still in the very early stages of AI. I mean, the primary technology here is like just LLMs, right? We didn't even touch a lot into like voice or like multimodal kind of media and so many other ways AI could interact with the world. And just based on LLMs, we just got these huge companies, huge spend and everything. Maybe within the world of like our current AI spend and all that, maybe there is a bubble, but at the same time, um, we do see a lot of enterprise adoption of AI, and we do see much more innovation happening so quickly. We see like sovereign nations jumping in. I think in some ways it's different from like the dot-com bubbles and so on. I think there's real value that gets accrued and developed here. So maybe it is inflated, but I don't think it's really a bubble. I think we're just getting started. And of course, I think the whole like, you know, spend between all the big companies and all that, there's a very insular kind of money moving around in the ecosystem. But I think it's all self-reinforcing. I do think the money getting developed into infrastructure is necessary and will fuel the next few waves of AI development. Is it too much money? Where do we get the money? We will see how that plays out. But I do think we're still in the early innings. At the application layer, I do find that the most interesting place. I do think that's where all the value will come from moving on. I think my perspective is that all the frontier models, all the it just really comes down to like Google, OpenAI, Anthropic. Like that race is like already done, in my opinion. Like they'll compete. Any new, they're the incumbents. Any new entry into that, probably not going to work out. So I think where we could really focus on as investors is at the application layer. And when ChatGPT first came out and the first wave of application layer companies came in, there's this whole thing about like AI wrappers and so on. And especially in the early stages when we were experimental and there wasn't as much clarity around what customers would spend on, we did see a lot of companies that would try something new but die off really quickly. I think the first wave of consumer apps and application layer companies, they're just kind of more thought experiments, I would say. I think they're all very necessary to just really test the market, and some had really great outcomes, like don't get me wrong. But now I think the founders who are working at the application layer, they're much more sophisticated now. They got better technology, they got better models. They kind of know what works at the enterprise level or what works for consumers and what doesn't work. I think there's enough like case studies now to really see where the value is. So I think the vertical AI and full stack companies, they're probably the most promising to me right now. And I think just having deep domain knowledge and networks to help with like onboarding, to help with like sales, I think those are the things that really truly matter more now rather than just the technology itself.
Yeah. So the domain knowledge is so important to the use case application layer. And if we take one step back, recently a lot of public market investors began to build up their position of the Google, not only because of the Alphabet, Gemini is doing well, but also they feel like, for domain knowledge and, proprietary data perspective, Gemini going forward can have a seamless, connection with all the Google internal ecosystem data. Of course, with the permission from the user. What do you see the Alphabet position in the all tycoon race? And how do you see, it will sort of impact the comparative advantage of the GPT and the other independent company?
No, that's a good question. I feel incumbents and the superscalers will always have a distribution edge. Like Google, for example, their model got really good when it came out. It was just beating every other model, and they're like a top contender with OpenAI. So I think Google's approach is really good in the sense that they're really ramping up already existing services that users use. So I don't think they're changing consumer behavior, but really amplifying and accelerating how people use the tools they already are using. In terms of like actual adoption and innovation of new tools or new verticals, I don't really see that happening. Like for example, Google with like Nano Banana, if the image generation, things like that, integration with other tools, same goes for Microsoft and so on. It's helping people do the work even better and faster in their already existing workflows. But let's say for like a super specialized niche in a different industry, let's say employee relocation or like dental clinics or something, I don't think Google will create a whole new business line just to address all the specific pain points of those particular industries or consumers. There are general models that people can use, right, to do maybe like 20-25%. But in these particular industries, if you could have like a particular system of record or CRM or just workflow automation that addresses their specific pain points, I think that takes a new company altogether. And I don't think, these industries are big enough for any of like the hyperscalers or big, you know, models to really dive into. So at the horizontal level, yeah, when like OpenAI created their app store, it killed off so many other startups, right?
In the very beginning, right? Back to 2022 and 2023.
Exactly. Yeah. Like there's no competing against Google. There's no competing against like Meta or OpenAI. But like the deep fundamental the vertical levels, yeah, there's so much more opportunities here.
Yeah. I remember, when the mobile internet began to boom and people argue and challenge that, if going forward, people just look at the app and then, there's no need of the Google ads on the mobile internet anymore. So there, I think, it's sort of a moment where people, began to shake their confidence about Google. And I think,
Yeah.
same thing happened in the early age of the GPT moment. People feel like, oh, everyone use GPT and then, no need to Google something. But it sounds like,
Yeah.
Google gets some, luck aside with them as well. Like every tech
Yeah.
evolvement, they kind of like okay and not disrupted by the innovation in a sense.
I think maybe decades ago when incumbents were moving a lot slower, then yeah, they could get disrupted. But nowadays, I feel, the Magnificent Seven, like, Amazon or like Meta or Google, they're just all really, really good. I think they know how to adapt to like the startup culture, whether they're acquisitions or launching their own products or so on. So I think the big companies they have the capital and the willingness to invest and innovate now as never before. So there will always be contenders. And I think one shift we saw earlier this year was like search, how search is done. Like SEO was kind of dying because people will stop going to Google to search up like, oh, what are like the best golf clubs or something. They'll go to ChatGPT or Perplexity and,
Yeah.
have, these like new platforms do the search for them. So then now you got like AI SEO platforms coming up and you see like Perplexity and ChatGPT just taking up a much larger share of search away from Google. But now like they're going into like the browser war with Chrome. Perplexity and OpenAI, they launched their own browsers. So they want to own more of the user's attention, their search and everything else and the entire user behavior. So I think that's like another new front that we're interested in. We're looking at it, see how that shapes. Because like Google's dominance with Chrome, I think there's some real challenges now with these new companies.
Yeah, I think that part I'm also, sort of amazed by Google's company ideology in a sense. I feel like, it's their principle to be open. And, the side product, the side effect would be they enable the competitor a lot in a sense. I'm a little bit,
Hmm.
surprised when I use the Atlas from GPT and also
Yeah, yeah,
the Perplexity Comet. And I found that most of them, they are, building on the Chrome. And I don't
yeah.
think, this thing is gonna ever happen in Asia because Asia, people has kind of an empire mindset.
Hmm.
Definitely, incumbent tycoon will not allow any new challenger to use their,
Exactly.
infrastructure to build their own, the business, to be a threat.
But nowadays, I think everyone is just much more open about it now. Um, I mean, we'll see what happens. Like initially, we saw Microsoft and OpenAI have like a very, collaborative deals happening, but now it's getting kind of controversial. The lawyers are involved. We'll see how that partnership shakes out. So I think in the beginning, everyone's very collaborative, especially when the pie is still growing and everyone can still get a big piece of it. But we'll see what happens later when it becomes a real competitive threat.
So in your fund one and accelerator age, I guess you have double-digit portfolio already. Like, could you talk about like what is your most successful portfolio over there, and what kind of sector they are developing?
Yeah, yeah. I would say over the past like 2 years, we went just kind of all in on AI, as so does like everyone else. But I think for us, what I mentioned before was vertical AI and full stack AI to us has been, I guess, the areas where we've seen the most success. And I would say the full stack companies have been particularly interesting to me. So our best portfolio company, one of the best we have is Corgi. They're a full stack, like full carrier insurance company that rebuilt a carrier like ground up using AI systems. And they came from YC and within a span of like almost 2 years, they just grew astronomically. And in the insurance industry, you just have this like huge incumbents, right? These are like $100 billion companies with market cap. And insurance GDP or spend like by US GDP is like double digits too. So it's a huge market, super fragmented, mature, old, and technology adoption is really slow. And I think historically when new startups come by, they're like a kind of like a SaaS model. They'll be like, okay, we're gonna build like an application tool and we'll just sell it to all the carriers and make money off of that. I think what Corgi did was super interesting. They said, hey, all the economics are tied up in these carriers. If we create our own insurance carrier using AI and unlock all the value, our margins would be insane. We could service much more people, better customer service. Um, and, the $100 billion company, they could just capture most of that value for themselves instead of trying to capture like 10K, 100K selling across to different companies. And so they've been just on an absolute tear in the span of like almost 2 years. They've been like, in my opinion, probably the model for what full stack AI company should look like. And so that's one company that we're super proud to back. And yeah, another one. Yeah, we have a lot of those out there. Like three of them. One is employee relocation. One is commercial real estate. They've been doing really well. Another company we invested in is Speakeasy. They use AI to help create and manage like SDKs and APIs. So it's kind of like a picks and shovels play. As AI agents talk to each other, the use of APIs is going to dramatically increase. And, managing that is just, the documentation, the managing, the repairs, it's just going to take so much. It's going to overwhelm the data teams. So they create a platform which automates much of that for you. So that's also been a company we're really proud to back that's been doing really well. So yeah, I would say, the more vertical and deep you could get, and also just the full stack approach and also the picks and shovel approach, all of them has just been having good outcomes for Goldhouse Ventures.
Yeah. What's the name of the agent API conversation company?
Speak Easy.
Speak Easy. Okay. I come from Web3 background, and people always, in Web3 they have a stereotype that the Web3 as a permissionless, global, worldwide computer, open. That one is designed natively to be a sort of a communication layer and also the payment settlement layer for the robot. And also the agents in the future. But sounds like, in AI, you can do in API, right? Did you get any chance to speak with your founder, in the end of the day, can API fulfill those type of demands if there are like, hundreds of billion agents in the future, or maybe there are some kind of a converge between the Web2 API technology and also the open permissionless blockchain?
Yeah, no, that's a good question. I haven't talked to him about it, but that's actually something interesting to chat about. I'm more than happy to connect you with our founder as well.
Yeah, would love to. Yeah, cool. And I think you mentioned all those sectors it's getting very popular. And but also on the flip side, I know the competition of the allocation is also very intense in Silicon Valley, right? The capital over there is always a little bit oversupply as compared to the good assets. So how do you win the allocation competition? How you sell your money?
Right, exactly. Capital is definitely a commodity, so you have to bring more to the table. I'm very happy to share our allocation win rate is like almost 100%, which I think very few funds could say. Yeah, there hasn't been a deal we've wanted to get into that we couldn't. And most of the time we get these deals and allocations with preferred terms as well. I think there's two reasons for this. One is like the affinity angle that we bring. I think Asian founders, when they hear about Goldhouse, our story, our brand, and how helpful we are with our network and capital and just overall involvement, they want us on their cap table. Not because our money is just any different from anyone else, but I think one, we're just a lot easier to work with. I think there's an inherent sense of trust. And I think they really do see the value of our network. If they want to find an advisor, like an exited founder or like a new investor, or maybe the first Fortune 500 customer, they know they could get it through our network. And I think there is that trust as well, knowing that, hey, we come from a startup experience, investor experience. We know what it feels like. We know what it's like to grow up Asian here. We know the unique kind of struggles you have, that you don't have to feel isolated. We have a community of other founders. We have a community where you belong, and it could be like a safe space for you too. I think that also resonates as well. And then secondly, our angle in media, entertainment, and anything with creativity related, I think our celebrity network has always been like a huge draw to our events as well. So we could definitely help with PR, with marketing, getting them connected to the right folks. And I think just like that domain expertise and entertainment too comes in helpful. Um, and yeah, so I think for those two reasons, we almost always get the allocation we want. We like getting into the deals has never been a problem. Getting allocation hasn't been a problem. I think now what we're really focusing on is like, when can we get into these deals? And, of course, sooner is better. So that's our focus now.
Gotcha. Yeah. Getting to the deal is always, associated with the concept of a social capital, being a venture capitalist. If we take one step back, in the end of the day, the superior return attributes to both social capital and the intelligence capital. Intelligence capital means how you can be ahead of the market research and be, more, you can predict the future more accurately in a sense. Social capital means like, okay, so there is a sort of very popular idea, very popular founder, but you can, just sell your money successfully over there, right? So how do you see as a successful venture capitalist, how much percentage, attribute to the social capital in the long term and how much attribute to the intelligence capital? Because as far as I know, as a hedge fund manager, or public market equity investor, pretty much it's, 100% or 90%, relying on the intelligence capital, not on the social capital, right? Yeah. So how do you break down, those two contribution in Bay Area?
Yeah. No, that's also a really good question. I think intelligence-wise or IQ-wise, I think VC investors, they always talk about being contrarian and so on. But, to be honest with you, I think most of like the consensus bets are like probably where the money is heading. I think everyone just kind of knows the macro trends, where it's going.
But it sounds like very cool to position yourself as a contrarian, right? You don't want to say, I just follow the crowd and I win the allocation by BD.
Yeah. But I think the worst thing is like being contrarian and wrong. Then you just look stupid and you lose money. Yeah. So being contrarian for contrarian's sake is always terrible. So I kind of see it two ways. I think it's you either find the consensus bets, and these are, we all know where AI is heading. We all know where like which companies are going to blow up and have like the most value and so on. And you just try to get into them and get as much allocation as possible. There's that style of investing. And then the other one, which is more contrarian and more, I would say, like not artisanal, but just like pure VC style of like placing contrarian bets. I think that happens much more early stage, like the pre-seed area, when you're really betting on the market and the founder. The product is still in development. You don't know if it'll go well. And I think this is where the most variation in investor judgment really kicks in. One VC will look at one company or one founder will be like, these guys will never make it. Another VC will look at the exact same deal and be like, oh my God, we have to leave this round. So in terms of like IQ, intelligence quotient wise, I think, there's not much real data available. So maybe in the public markets, you could go through tons of data, tons of numbers, research reports, and so on. But in early stage investing, you really don't have much of that. So I think the variation in investor judgment goes across the whole range. So I think that's where the social capital really comes in. I think this is where being able to connect different dots together helps a lot. It's a different type of intelligence, I would say. And for us, I think when we look at AI investments in the creative space, it's not happening in a vacuum. Like, sure, we'll read articles, we'll do research online, see where technology is going, but we have our own proprietary network of like experts in the field that we could just have these conversations with, right? And these happen through relationships. Like maybe I'll talk to the president or CEO of a large entertainment company or a large media company, and they'll tell us what's top of mind for them. And I'll have that information proprietary and use that to really evaluate the next generation of startups that are working in this space. And from there, you're also developing relationships with other investors, maybe the lead investors, to help you get into the deal. Maybe you have to talk to a founder and pitch them to get into the deal itself. So I think how it works hand in hand is, if you're making a consensus bet, I think, you don't really need much IQ and
intelligence
you just need
capital.
a lot more intelligence capital. I see intelligence capital. That's almost purely social capital. But I think on the early stage, I think you definitely you need both. You do need the intelligence capital to really understand maybe some of this information that's not public, that's proprietary, and connect the dots there, and also then get the social capital to get into the deals.
right now most of your current portfolio are in the AI software application layer. And
Hmm.
how do you see the the humanoid and the physical AI? Do you think it become a consensus bet, or it's still contrarian? And what is your point of view on that?
Yeah, I think it's consensus. I
Mm,
think what's not consensus is how quickly and to what extent. And so for us, we really shy away from robotics or deep tech or hardware just because it just takes so much capital. And for
mm,
us too, I think, anything deep tech relies just such deep expertise that we don't feel comfortable investing unless we're like have like so much conviction in it. So I think robotics, like in Asia, it's everywhere. It's happening. I think maybe when you think about like robotics and humanoid robots here, I think the big companies are really taking the lead. We saw with Tesla and so on. I still think the technology is still very far away to have um, almost identical human performance, but we do see the software and the hardware improving dramatically. And I think over the next like couple of years, we will see much more consumer products available. And I think once, kind of like I'll say Waymo, right? Autonomous driving, they really
yeah.
ushered in much more trust and much more openness from consumers about, self-driving vehicles. I think once we have some type of consumer product from the humanoid robotic space, I think that's when also will just really kick off. But I'll say, yeah, I think it's still like pretty far away in my opinion, and we're not actively investing or exploring that space.
We're seeing a lot of AI startups, and most of the people will say the investment methodology, how you make a decision finally, is still similar as how you make decision into investing in the consumer internet and SaaS company before. But do you see there is some kind of a nuance between those type of methodology, and what matters most important to you when you pull the trigger to invest in an AI founder?
Yeah, I mean, we think about that all the time. I think for me, what is timeless is like who is a great founder. And of course, every investor has their own biased judgment of like what kind of founders they invest in. I'll say I'm much more early stage investor in the sense that I place a much larger premium on the founding team and the founder himself or herself more so than their existing product. Um, and of course, the market itself is a whole nother thing. But to me, I think whether you're investing in an AI founder or maybe like a SaaS founder from the past, I think there is an innate human quality that is just kind of timeless. And to me, what I look for is just this almost obsession about creating something great and just a resilience to keep going even with so many setbacks and failures, and having the courage to address uncertainty and being able to be flexible and fluid. That's what I really look for. If they have like just a sufficient intellectual firepower, of course, like a lot of founders we talk to have that, but I think it's just more the soft skills. Like, are they able to have that conviction in themselves, able to share that vision, and have more than anything just the emotional resilience to go through failure after failure or like hardship and still keep going. I think that's what I look for. It's like this like it's really hard to explain the sense, but it's definitely like a conviction and obsession that you just kind of see it in the way they talk about it, how quickly they execute. They are just consumed by this idea and the need to bring it to life. When I see that spark, when I see that fire, that to me is a great founder. And if they're operating in a market in a space that we like, then yes, like we'll pull that trigger. And of course, there are
Yeah.
other proxies and metrics that kind of reflect that kind of behavior. Like, of course, we look at traction, right? Um, I think more so than hard numbers is like what really, to me, matters a lot is like how quickly they got there. Are they, going out, like doing sales themselves? Are they able to do non-conventional ways to get their first 100 clients or customers and so on? I think how they get the metrics is more important to me. But of course, end of the day, it just comes down to the founder.
I recall, Sequire mentioned their metric is you want to invest in the very capable, very savvy personality, but also not very easy to deal with. Basically, like, a smart and ambitious asshole, in a sense, right? What is your view on that?
We don't work with like jerks. Like, there's a couple of founders we met
Okay.
that were like, I mean, it's kind of like marriage, right? I mean, I'm not married, but like maybe like in a relationship, like you don't want to
Yes.
marry someone you're just gonna fight with every single day for the rest of your life. Like we kind of
Yeah.
see investing almost like with that level of commitment. Um, For founders, I think the unreasonable piece comes um, in the sense that like they're so self-assured in the confidence and knowledge they've accrued of building in this space that they don't really care what other people think. If other people say, oh, you can't do that, you shouldn't do that, do X, Y, Z, they're just like, no, screw it. Like, forget that. I'm just going to do my own thing. Because they know like their vision and their understanding of the market is superior to everyone else. And so they could be difficult to work in that sense, maybe. But I think in terms of like interpersonal relationships, I think, yeah, we don't work with jerks because end of the day, if you're an unpleasant person to work with, your employees are gonna leave, your customers won't want to work with you, especially at the early stages. Relationships are so important with your investors too. Um, so I do think Silicon Valley glorifies like the Steve Jobs or like some other super high profile founders.
Is Steve Jobs
Um,
or Elon Musk is in your comfort zone if they met you during their early age?
I mean, who knows? Maybe when they were like in their early 20s, 30s, they would be more open. I don't know. But we're seeing them when they're at the peak of their careers and when they could afford to be that kind of person. But I would say the most accomplished founders we have like unicorn founders who are starting new businesses. We've had exited like founders who did really great starting new companies. They're all very, very nice people. They're super intense, but they treat everyone with respect. They know how to have hard conversations, but in a fair way. And they're not mean or rude or, um, yeah, they're not trying to hurt anyone really, except maybe the competition. But you meet them, yeah, out here, they're very genuinely pleasant people, and we like to work with them too. And of course, like us too, like we're not trying to be like super mean or abrasive investors either. And for us, our approach is like, hey, we're gonna support. If we invest in you, we're gonna support you no matter what. We'll make life as easy for you as possible. This is like a lifelong partnership. And for me, like what I told all my founders too is like, even if your startup like doesn't do well, you got to wind it down. I would back you again in a heartbeat because life is long. It's about these long-term relationships. Maybe the first one or two times it doesn't work out. Maybe the third time it will, and I'll be there to support you. And those are the kind of
Mm.
founder relationships that we want.
Do you prefer the second time founder, like the serial entrepreneur, or you are like indifferent?
Ideally, second-time founders have a lot of advantages. Whether it succeeded or failed, doesn't really matter. If it failed, it could actually be even better, because then they have even bigger chip on their shoulder. I think first-time founders have the enthusiasm, they got the energy and the passion. What I would say though would be for first-time founders, if they have just like really deep domain expertise, then I think we would be
Mm.
comfortable backing them. But if they don't have any work experience and they don't really have much life experience either, and is a first-time founder, those are a little bit more difficult to work with. But at the same time, they can make it up with youth, with energy, and so on. So I'm never discounting anyone by age. However, I think second time founders, serial founders, what I do like about backing them is like they know exactly how painful it is and they're willing to do it
Mm.
again. And that to me shows conviction. And that to me shows that like almost like they can't do anything else except be a founder. And I love that energy too. Because being a founder makes no sense. If you want to make money, go do any other white collar professional job. If you want better work-life balance, go work at any of the big tech companies. Go work. You could be
Yes.
comfortable. If you want prestige, you could go anywhere else. Um, but the fact that you're able to eschew all of that to do it again, I think to me that's like a level of respect that um, just automatically I just give to these founders and all
Mm.
founders generally.
Yeah, makes sense. Do you see it's very easy for founders to get into a lot of stress, or maybe in Bay Area, the
Okay.
buffer, the innovation atmosphere is so good, even you are fail, maybe possibly you will get, acquired by some big company. So in general, like everyone is
Mm.
super optimistic. Like how do you see the general vibe over there? Because I know in Asia, a lot of founders, they always are in a lot of, stress because in
Yeah.
Asia, merger and acquisition is not that popular, right? So you either,
Yes. No.
go home go big or you just bankrupt and go home.
Yeah. I think it's different here. I think the social pressure is a lot higher financially too. But I think here there's a level of comfort knowing that like, hey, like failure is not, no one is really dismissive of it. As a matter of fact, sometimes just like praised. Um, and people see it as like sometimes like a good thing because when you go start a new company, you could say, even though my last startup failed, I'm trying again. Here's what I learned. So it could be a badge of honor in some ways. I would say the
Mm-hmm.
competitive pressure really increased the last year and a half or so. There have been a couple
Because
articles lately about like the 996 work culture infiltrating the valley. And not just for startups, but for like big companies as well too. I think with AI, I think the speed to market, speed of development has just drastically increased. And people, the founders are getting extremely competitive. And even Corgi, the portfolio company I mentioned, they're probably the most extreme. They do 7 days a week, all in office, like 12 hours a day. It's crazy.
oh wow.
Um,
Okay.
yeah, but I mean, the results, speak for themselves. They've been one of the fastest growing startups in just history. And, you can't get that level of performance or results by doing like 40-hour work weeks. So, and I do think there's a lot of like younger founders who are willing to put in that time and energy and work ethic. And we're just seeing that almost like a race. Because for every company now, because of AI tools and everything, you have 10 competitors like popping up like so easily. So the competitive pressure happens much quicker. There's more of it. And I think the founders are feeling it.
Okay, cool. Thank you. My last question would be, in
Mhm.
such a dynamic AI age, what's your advice to the younger generation in the college or just upon graduation?
If I was back in college right now, I'd be really scared. I'm scared for my future kids too.
Because everything is replaced by AI?
Everything's replaced by AI. And I think I like the imagination to see what kind of new jobs will happen through the AI revolution. Like maybe like 5, 10 years ago, we didn't have a thing called like a data scientist or like a, secure, like cybersecurity engineer or whatever. But now those are so common. So I think for every job loss, like there's usually something that replaces it. I just don't know what it looks like. So in terms of economic security, I have no idea. However, what I do know is that, I think human nature, not going to change anytime soon. So I think the soft skills of being able to, the social capital, right? Being able to make those connections, being able to just be like a good human being, have being a good listener, really being motivated to make these connections, find mentors, find sponsors. Um, you know, I think those soft skills are going to be placed on much more premium. And I think no matter how the job market changes, how industries shift, how people get jobs will still kind of be similar. The networking, if you have like a sponsor inside a company that's vouching for you, that's not going to change, the referrals and all that. So I think being able to, one, build those soft skills, and two, really think early about your own personal brand. I think that'll be also very important for students. How do you want to be known? How do you want to position yourself? I think with AI now, like information acquisition is so easy. I think the pace of learning will only continue to increase. You can learn anything in an instant now too.
Mm.
So I think having a deeper sense of who you are, what you want, being able to self-introspect and be self-aware, and using that to make really good connections with people in the industries you want to work in, to get the jobs you want, to build that trust. I think those will be uh, just more of these like classic, timeless kind of skills will only continue to be important and significant moving on. So for the next generation, uh, we could just spend hours thinking about how the job market will shift, but how you get those jobs, I think, will remain the same, and especially how you excel in it. And these are just human to human interactions.
Yeah, I totally agree. I think, now getting the knowledge it become a commodity. So asking the right
Yes,
question become more important, right? And also, as a
100%.
human being, AI cannot replace you as a human. So, your
Yeah,
personal brand become more important. And everyone, have
right.
to be their chief marketing officer for themselves.
Exactly. Yeah. Maybe there'd be a startup that does AI agent for that, like a personal chief marketing officer. Who knows? But 100% agree. I think being able to connect at a deeper human level, um, yeah, we're actually seeing trends in that too. A lot more in-person events, experiential events. I think people crave human connection and
Mm.
involvement. So that part of human nature will never change.
Okay. Yeah, very, very well said. Thank you. Thank you, Daniel. And really appreciate your sharing.
Thank you, Bill. Really glad to see you again. Thanks for hosting me here.
Thanks for watching Build It Up. If you enjoyed this episode, don't forget to hit that subscribe button, drop a comment, and share it with a friend. And if you'd like to catch more stories and insights, you can follow me on LinkedIn, X, and of course, right here on YouTube. I'm Bill. See you in the next one.